Should you be getting a company van? Let's find out. Hi, I'm Kimberly Shapcotts, qualified chartered accountant, property investor and entrepreneur. Let's sit down and have a chat. Company vans. What are they all about? How do they fit together? Well, the first thing we want to mention about company vans is they're a great way to purchase a vehicle in the company that you can claim a lot of different expenses on. And if you do have them as a benefit, they are quite a cheap benefit. So let's have a look in a bit more detail at how everything fits together. And our starting point today is when you actually purchase that van. When you purchase that van, it will become a company asset. So this will be shown on the company's balance sheet. If you're not sure what a balance sheet looks like, then check out the video on the company accounts and that will go through what the balance sheet looks like and where it will sit. Now, the benefit of being an asset is we can also get capital allowances, and check out the video specifically that goes into the detail on capital allowances. The great thing about capital allowances, we're going to be able to claim 100% of this company van against your tax. So it doesn't impact your profits, but it is going to give you some good tax relief as well as give you a vehicle in the company. So if we take some round figures of, say, a van for 20,000, that means that we're going to be getting £20,000 off our tax bill to reduce the corporation tax, which is great news because obviously with rising taxes, this is a way to keep your tax bill to a minimum. As the van is a company asset, that also means that you're going to be able to claim the running costs of that van through the company. So we're talking things like insurance, MOT, servicing, all these sorts of expenses that happen with vans that we need to do on a regular basis. They're all going to be allowable expenses through the company. And it's very key that you do actually get your insurance through the company because it's the company that owns the vehicle. If you do happen to be VAT registered for, say, a serviced accommodation business or something like that, then you can also claim back any VAT you've paid and help reduce your VAT bill as well, which is always just a little bonus for your business. In terms of financing that vehicle, we also just need to consider if you're buying this cash, which means you'll own the van outright, but I am aware a lot of people will buy it with maybe a HP or a finance agreement to help spread the cost of that. Now, it's just important to remember that when you do actually pay for the hire purchase or finance agreement, those costs are not allowable expenses. You'll have had the whole $20,000 as an allowable expense, but then paying those monthly fees that you're paying, say £100, £200 a month to pay off your van, is not allowable expenses. However, on these agreements, you're likely to be paying some sort of interest, and the interest is most definitely allowable. So you will be able to try and claim the interest on your finance agreement, but just not the payments you're making, because that's basically a loan and you can't get deductions for loan repayments. Let us move on to what happens with the van if you're using it privately. If you're using it completely for business purposes and no personal use, then it's just a business asset. There's no benefit in kind. There's no extra expense to you. However, I do appreciate for a lot of people, they may get something that they can be using as a personal vehicle as well as a business usage. If that's the case, then what we need to just consider is that we've got a benefit in kind. Now, unlike a car, which is quite an expensive benefit, and check out the company car video to find out how they fit together, for a company van, it's actually quite a cheap benefit. HMRC put together a list of what the benefit is each year, and that does change each tax year, and then that amount is treated as the benefit you're receiving. For example, that benefit may be $3,600 for that tax year. In the next tax year it might be $3,700 or whatever that figure is that you can get from HM Revenue and Customs. But that's it. You're not looking at the cost of $20,000 for the price you paid. You're literally looking at the value of that benefit being that $3,600, $3,500, whatever that amount is for that tax year. So as you can see, you can have a £40,000, £50,000 vehicle and still only have a benefit of $3,600. Now, what does that mean? Because you're going, and what do I care about that? Now the reason you care about that is because that will go on your P11D, and on your P11D the company will pay some Class 1A national insurance. Now this is at 13.8% of the benefit, so that means you're only paying 13.8% of, say, 3,600, so that's a lot less than 20,000 or 40,000, whatever figures the van may be worth. The other side of things is that you as an individual will get taxed on that benefit to you. So if you've got a benefit of 20,000 and you're taxed at 20%, so that benefit would be £4,000 to you. Whereas actually what we're going to do is we're just going to be taking that 3,600 at your tax rate, so let's go with 20%, that's going to be £720. So that's actually much lower than that 4,000 if it was a van at 20,000. Obviously for a van at a higher figure, that's going to be even more. So as you can see, it doesn't matter how much the van is that you've purchased, you're still just going to be getting that £720 tax bill for having that van and being able to use it as much or as little as you want privately. Now, if the company is also paying all of the fuel for that vehicle, then there may also be a benefit for fuel for using that van personally. And you might think, oh, how much is this going to cost me? Well, again, because it's a van, they have set limits that are quite low. For example, in the current tax year, it's about £757. So you're now going to get taxed at whatever rate, so your 20% of the 757. So it's going to cost you £150 for putting all the van fuel through the company and claiming the benefit of using the van with the fuel. So it kind of gets to the point of being, in some ways, a no-brainer, depending what vehicles you are wanting to use. Now there will also be that Class 1A national insurance on it, so you'll still have to pay that 13.8% for the company. But as you can see, compared to what you'll hopefully maybe have looked at on the company car videos, having a company van is actually a really great way to minimise the tax impact of having a vehicle through the company. If you're not going to be putting the fuel through the company and you're going to be claiming mileage, then there is a slightly lower mileage rate to be claiming all the fuel that you are putting in the company van. These rates are available on HM Revenue Customs, and check out the link below which will just take you to the point where you can look at the rates that would apply. There are further benefits if you decide to go down the electric vehicle route and in an electric van. The main thing here is probably to check out whether that works for you, and if it does, then the tax impact may be even less than having a normal van. Alternatively, you may decide to lease a van, and that's perfectly fine. You are able to lease a van, and the payments that you make for the lease will be allowable through the company. The key thing here, if you are VAT registered, is you can only claim back 50% of the VAT that is charged to you. One of those quirks of VAT rules, so you can't claim all of the VAT back, but you can claim 50% of the VAT. But all the things that we've mentioned about being a company van and having a benefit in kind for the vehicle and for the fuel, they still apply. So you're not getting the big capital allowances hit to help reduce your tax, but you are getting the benefit in kind still if you go down the leasing route. The final thing worth mentioning today is the key question that maybe was the first one, but we dived right into the tax. The key question here is, what is a van? And you do just need to make sure you're careful that you don't go and get a car which you think is classified as a van, but it isn't. So make sure you talk to the people that you're buying the vehicle of to make sure if it's a vehicle with a double cab or what the tonnage of the vehicle is, to make sure that it is classified under HMRC regulations, legislation as a company van. There are some vehicles in the middle that are definitely a van, there are some that are definitely a car, and there are some in that grey area in the middle. If you're going for a car van that's grey in the middle, make sure it's on the right side, because if it's a company car, then there are different rules and regulations, and check out the video on the company car side of things. If it's a company van, then you're in the right place. This video has told you exactly what you need to know about company vans. In summary, the key things that we need to make sure you're aware of: there are capital allowances available, there is a benefit in kind. This is quite a cheap one, so maybe preferable depending on the vehicle rather than a company car if you're thinking of what type of vehicle you want to use in your company. If you're getting a loan, the interest is allowable for tax purposes, but not the full loan repayments. Hopefully today you've discovered what the implications are of having a company van and how much it will cost you tax-wise, and what the benefits may be for you. Please like the video and do subscribe to the channel, and let's make tax less taxing.